Good morning, ladies and gentlemen, and welcome to Maybank Invest ASEAN's fourth and final ESG webinar for this year. Following 3 earlier conversations on DEI, tracking sustainability ROI, and new energy transition strategies, today's conversation is on sustainable finance. The big questions today are the following. Do net zero targets and sustainability goals get relegated down the priority list in the face of pandemics and recessions? 2, what are the modalities of green financing? And 3, how can ASEAN make its mark on a net zero future? On today's panel, we are privileged to have with us 4 esteemed speakers. Eugene Wong, CEO of Sustainable Finance Institute of Asia Limited. Muhammad Sani, Principal Financial Sector Specialist from the Asian Development Bank. We have Kun Pusit, EVP ESG Division Bank of Aditya. And last but not least, Timothy Tan, Senior Associate from the Sustainability and Sustainable Finance Unit of the Singapore Exchange. I'm now delighted to turn the mic over to my colleague, Jacqueline, who will moderate the session from here on. Jacqueline, over to you.
Thank you, Danielle. So I would like to start off by saying that this session is really timely. Classes and some government offices in Manila are actually suspended because of a typhoon. So that is actually how relevant, ESG and sustainability is for us today. So sustainability financing and investing is actually something that's very personal to me. A few years back, before I joined Maybank, I was actually part of a team that was trying to roll out gigawatts worth of renewable energy projects globally. And while everyone we spoke to actually knew what a solar plant was or what the wind farm is, and was actually very receptive of a lot of what we're trying to do, what I realized back then was not everybody understood what it actually took to support these kinds of projects. And then fast forward to today, where we have banks and investors actually wanting to finance and to lend to green projects, it feels like worlds apart. So I guess I would like to start today's session there. For each of the gentlemen, I would actually want to ask you, how has the past 3 years changed the thinking and the timelines on sustainable finance in ASEAN? And what do you think was a tipping point? Was there actually a tipping point that kind of like accelerated the snowball of a movement that it is at the pace today? So let me throw that first question to Eugene. What do you think?
Well, thank you very much, Jackie. I'm delighted to be here. A few years ago, we were kicking the climate change can down the road, but guess what? We're now at the end of the road, and there's a realization that if we don't address climate change, none of our other problems will matter. So we're going to need to direct a huge amount of money to achieve this. And also there's been a significant increase in the attention that's being given to sustainability of late, not just in the region, but globally, especially in the climate space. So in the recent Shangri-La dialogue in Singapore, Fiji's defense minister said that the climate change issue posed the biggest threat to the Asia-Pacific region, not the war machinery. That's a very interesting statement. But why are people starting to wake up? Well, I think firstly, it's self-awareness, like you pointed out just now. We're actually seeing the effects for ourselves, right? The floods, the droughts, the water shortage. There's also stakeholder pressure, investors, financiers, customers, they're all making pledges, they're all waking up as well. And of course, it's political because governments have made pledges like the NDCs. And in some countries, citizens are even suing governments. And this is happening everywhere from Europe to Latin America.
Thank you for that. So Sani, over to you. As someone who also works very closely with governments and corporates, what do you think?
Thanks, Jackie. And good morning, everyone. I'd like to begin by thanking Maybank for inviting myself and ADB to this Invest ASEAN event, and obviously very happy to be with this prestigious panel of speakers and yourself as the moderator. If I were to summarize, I know it's a bit awkward to start with a summary, but if I was to kind of think of what have changed over the last 3 years in ASEAN, I would say 2 things. First, there's a realization that there's urgent need for action. And second, there has been a response through collective action. Let me try and unpack that briefly. In terms of urgent need, I think we've all of us are still going through, have gone through the pandemic, which with huge impact on economy and livelihoods. And there is actually a connection between climate change and pandemic. It is not a coincidence that if you look at the data from science, from the health aspects, that the number of infectious diseases have skyrocketed over the last few years, over the last decade. And this is, this is partly due to deforestation, because what happens is that these infectious diseases in bats, birds, and other animals have always been there, but through development, unregulated development, deforestation, humans, we are coming closer and closer in contact with wild animals, with elements that we were not used to prior. So this has resulted in an escalation of infectious diseases, which has had disastrous effect on many people around the world. So that has led to the kind of realization, I think, that there is a need for urgent action. And if we also look at the IPCC report in earlier this year, April 2022, again, we see very worrying conclusions being made in terms of how even if we were to able to achieve the 1.5 Celsius target of increase, there will still be really strong impact on people's livelihoods in terms of the economy, as well as how it would impact them in terms of being displaced and so forth. So because of this realization, what I see in ASEAN over the last few years has been collective effort from the government, from the regulators, as well as the private sector, which is why you see, for instance, a significant increase in terms of the issuance of bonds in the space of sustainable finance. So the question now for us, which I hope we will discuss further in this session, is there is a realization, it's there, but are we moving fast enough? I'll stop there. Thank you.
Thank you so much for that. Just before we move on to Kun Punsit, maybe I'd like to throw back to insert a question on the governments, because both you and Eugene mentioned governments. Do you actually notice that, governments, do governments actually tend to deprioritize their green targets, meaning NDCs or net zero targets, when there is a health crisis? Is that something that you notice? Sunny, why don't you go ahead first?
Sure. Thanks, Jackie. And that's a very interesting question. It's something that I was actually looking into that even in earlier sessions, earlier discussions. And I would say that there has been a shift, but I would not necessarily conclude that the governments have ignored NDC targets and climate change in general. So I think if you look at data points, from Bloomberg and so forth, you will see that the increase in global debt issuance in sustainable finance have tremendously increased over the last 5 to 10 years. Numbers are now reaching 730 billion, 50 billion plus as of 2021 in terms of annual issuance, global debt. However, if you look specifically within the time frame of 2019-2020, which is the onset of the pandemic, there has been an increase in the issuance of social bonds. And if you do a comparison with the increase in green bonds, which is more for NDC and climate, so there has been that pickup of increase in social, which is outpacing the increase in green bonds. So what does that tell us? That tells us that government reacts to priorities. Government reacts to how their people, the experience of the people. So I think in a way that's not to say that the government was doing something wrong, but it's, I think, a natural reaction that during the pandemic, there were more issuances of social bonds in terms of the increase because governments needed funding to provide social assistance, to provide economic livelihood support to the people. However, I think as we improve and the pandemic transform to an endemic, hopefully, then I think we will see again the pickup in green bonds and other instruments for governments to achieve the NDC targets. Thank you.
Yeah, makes a lot of sense, because after all, I mean, people are part of sustainability at the end of the day. How about you, Eugene? Any thoughts on that?
Well, firstly, I think that's an excellent question, because in this part of the world, the governments are actually the Sherpas. So we need them to set the direction. We need them to provide the focus. I actually agree with Sunny's answer. I just wanted to add on a bit to it. I think that the short answer is that governments have had to be realistic. I don't think it's a question of losing focus, but like Sunny said, it's a question of priority. And they need to address the immediate pressing issues with the limited resources that they have. And in most of the ASEAN countries, resources are very limited. If you look by around the middle of last year, which was the peak of all the stimulus, the ASEAN governments actually collectively deployed stimulus packages of close to $750 billion. That's about 8% of our regional GDP. And where did all the stimulus money go? Much of it went to social safety nets, right? Disbursements to retrenched workers, the vulnerable groups, supporting SMEs that form the backbone of economies, providing lifelines to heavily hit critical economic sectors like tourism, and of course, dealing with the pandemic itself. So while we did see some of the stimulus money directed at green initiatives, the proportion of that is relatively low. On the contrary, we saw green unfriendly stimulus spending, such as on road infrastructure or subsidies to polluting industries. So many people say, oh, this is a really a real problem that ASEAN faces. But in reality, it's not different from the OECD. 79% of recovery spending in the OECD actually cannot be considered environmentally neutral as well. And 10% was actually tagged as mixed or negative for the environment. And the remaining 69% is unlikely to be benign to the environment at best. So this is why I think, it's a question of prioritization.
That makes total sense. I agree. So pivoting back to Kun Punsit, maybe you can share, what in the 3 years has changed from a lender's point of view. What have you been seeing on the ground from your end?
Okay, sure. Thank you, Jackie. I think, in the past 3 years, what COVID-19 actually shown some light on ESG is that we have seen, our clients, the business, and also, even, some SME, they actually, now, try to actually integrate ESG in terms of, integrating ESG consideration into their business strategy formulation, business target setting, business operation. And I think also very importantly, they also integrate or utilize, ESG financing instrument as a mechanism, to achieve, their business target. And they also, use that, as a mean, to achieve, business sustainability outcome or target. And I think, as Sunny has mentioned, there has been a significant, growth in terms of ESG financing globally. Right now, the current stock in terms of ESG financing globally is about $1.7 trillion US. Okay, and if you look, in terms of APEC, APEC contribution, we account for about 10% globally in terms of, green and sustainability linked loan, and we also account for as much as 14% of global share in terms of ESG debenture. Okay, and if you look, at Thailand, we also seen a very significant growth in terms of, ESG financing landscape here in Thailand. And it is an equation of supply and demand. We have received a very strong appetite, from local institutional investor. It's become now their mandate in terms of investment required, on ESG financing instrument. And we also see a very strong, supply side. Thai corporate are now very active in terms of, trying to achieve, as I mentioned, both business objective and also, sustainability outcome. And a snapshot in terms of market development, ESG financing instrument, ESG debenture market in Thailand only started back in 2018. And we start only about 10 billion baht, only 10 billion baht. Okay. And over the year, as of last year, the total, issuance in the local market was about 170 billion baht. So basically, CAGR over 100% in the past 5 years. And as I mentioned, it's also an equation of supply and demand. And one of the key, issuer in the market was also the Thai government. As Eugene and Sunny has mentioned, government play a very important role in terms of, making or developing this, ESG, market infrastructure, for ESG finance market infrastructure. For example, the Thai government, the Kingdom of Thailand, actually issued 50 billion baht of, COVID and green bonds, back in 2020. So that's just some of the key highlights, in the local market. And, if I were to look, into the next 3 years, I would think that, ESG financing market will continue to grow and, driven, by the post-pandemic, dynamic, as well as, the country and also corporate commitment to net zero. So I'll stop, my comment here. Thank you.
Thank you so much, Kun Punsit. So you mentioned, I like that you mentioned that corporates are starting to incorporate a lot of ESG into their management styles. How about you, Timothy? Is that something that you see as well?
Yep. Good morning, and thank you, Jackie. Yes, so as an exchange and as a multi-asset exchange, we definitely do see that. So starting with what everyone has been talking about, the sustainable financing world. I mean, everyone knows what the story is down there. It's been growing. What we've been seeing as well is that it's starting to go into the equity space as well, right? So it's not just the financing market within the equity space. It's starting to see corporates become a lot more sophisticated in terms of how they are messaging, in terms of how they're raising capital, and in terms of what they're doing with that capital, right? So in that sense, there is definitely building on what Kun Punsit has been mentioning. We do see that quite a lot. And the other part of it as well, right? In the past 3 years, what has been happening in ASEAN. I mean, building on what the other speakers have been saying, there is definitely huge collective effort. So you start to see that everyone starts to really understand that, first of all, we can't do this alone, right? Collective effort is really, really necessary. And we have to move as an ecosystem. So everyone has to play their part. And there is greater understanding as to what roles we all can play in terms of helping each other accelerate this whole process. So everyone has a slightly different role. Exchanges, we are a bit unique in that we sit in the center of the financial ecosystem. And so a lot of things that we do really is to help the investors and the corporates meet each other, right? When it comes to this journey and when it comes to the financing. So for example, in the past 3 years, in the past year, actually, what's been happening is that the ASEAN exchanges, collectively, we've been coming together. We formed an ESG working group, and we've been looking at our sustainability reporting requirements, as well as various metrics that we can align on. And the idea behind this is to really lower the informational friction that investors currently face. And, it just increases, this hopes to encourage increased cross-border investments, not just in the equity space, but also, across all of the capital assets, right? So this really what is happening. I believe that the momentum on this is really accelerating, and yeah, it'll only grow from here.
Okay, so I like that you mentioned that it's a journey, because ESG is a journey. I don't think anybody just wakes up one day deciding to be fully green, fully not dirty just by deciding. So in reality, I think the ESG journey would be more of, there's some brown in between. So it's from dirty, a mix of green and brown before fully going into green. So with that said, I guess let me throw this question to Eugene and Kun Punsit. From your experience, what has been the biggest difficulty of green financing, green bond financing? Is it actually sort of like the commerciality, finding renewable projects that are actually commercial enough to finance or to invest in? Or is it more of the tedious baselining process that these corporates have to go through and the really tough criteria they have to go through? Or is it more of the follow through after? So maybe Eugene, you might want to take first crack at that.
Yeah, thanks, Jackie. Well, firstly, I absolutely agree that sustainability is a journey. It's not a destination. And it's a journey that we constantly have to be taking and we constantly have to be monitoring. So what does undertaking a journey mean? It means that we have to actually be able to transition. And what's in the transition? A transition is really the balancing of ambition with reality. So the problems we're seeing now are really the usual teething issues for anything new. And we have to admit, sustainable financing is new. So the biggest issue, if anything new, is being able to speak the same language. How do we get everyone to speak a common language? Because without a common understanding, you can't get action. Transactions cannot happen. And obviously for green finance, the big question is what constitutes green? And you've heard the saying, 50 shades of green. And if the definition is not clear enough, you'll find that people are also pushing things that don't really qualify as green, but they're saying it's green. And this creates a lot of trust deficit in the market. So that's called greenwashing. And that's a really big issue that we're all dealing with now. Then is the issue of capacity, whether you're an issuer, provider, capital, an advisor, or regulator. And again, because it's new, so we're all finding our way around this. And the first encounter always takes time, and the learning curves are always steep, but we need to get past this. So the last part is actually on the actual transaction cost itself. You may find that there'll be increasing costs in terms of verification, monitoring, and reporting, whether it's for the structuring of the transaction, the use of proceeds, or the outcomes. But in my mind, honestly, these are relatively small costs against the backdrop of a bigger picture. And companies need to understand in the future that availability and cost of capital are going to be higher, and in some cases, availability non-existent, if they actually reflect a lot of climate risk. And at the same time, as we progress, we have more experience, the volumes increase, these services will eventually achieve scale and become cheaper. Right now, I know some regulators and governments are providing subsidies to support this, but certainly these are all teething issues that we have to get over.
Thank you for that. Anything to add, Khun Poonsit?
Sure. I just would like to add on, what Eugene has mentioned in terms of definition of taxonomy, because this is one of our key current issues here in Thailand. Our regulator are now in the process of formulating, the local taxonomy. So that way, the definition of brown, light brown, and green, or even transitioning will become clearer. With that, banks, and clients alike, we can actually, agree on the term, and also, I guess, could agree on, the certain, common objective in terms of transition. Okay, and I guess I would like to, share with you in terms of the real business case example. We have a client, that also want to actually transit, from brown to green, and they were, basically the power plant that want to use, a greater utilization of natural gas in terms of, doing the cogeneration power plant. And that, for us, without a clear taxonomy or clear, standard, what would, think of that investment? Do we think of that investment as a transition investment? Or do we think, that such investment is green enough, for the economy, for the business and the community, to accept? So these are some of the key issues that, are surrounding in terms of the transition or the employment, of ESG financing instrument here in Thailand. And lastly, as I mentioned that, the ecosystem is only being developed recently, as I mentioned that early 2018 that we first actually developed, a green ESG debenture in the local market. So we still need, to develop in terms of the local ecosystem, whether it's, the second party opinion, service provider, the local verifier, together with, as Eugene mentioned that, maybe the government also need to step in terms of providing incentive, because, for the client to make such investment, from the brown to green transition, or any investment, pertaining to the environmental objective, it's a long-term investment. The return on investment will take quite a long horizon. Whereas, in the short term, it just can only be seen as, the increase in, operating expense or investment, expenditure at best. So I think, you need to have, the certain, ecosystem that are supportive of, the client, to make that, significant transition. And I think it's, but having said that, with the government plan, what our Thailand commitment to COP26 in terms of, to lower our emission by 20-25% in the year 2030, or our, vision in terms of net zero within the year 2065, we see a significant, investment opportunities here in Thailand. CBI actually cite that there is about $100 billion in terms of financing gap here in Thailand for green and transition project, here in Thailand. So I guess, in some, there's a lot of business opportunities here in Thailand, but, we need to have the all, a part of the equation locally ready. So that way it will provide enough, both incentive and also motivation for our clients to actually make such transition. Thank you.
Thanks so much for that one. So before I head on to the Q&A box, I guess I just want to wrap up this bit first. So from what I gather, the difficulty is really on the definitions and, partially on the increasing cost, and basically the ecosystem needs to develop a little bit further as well. For Tim and maybe for Sunny as well, if you have anything to add, do you have any ideas how the capital markets and maybe, financing innovations can actually help these dirty companies who won't necessarily meet the criteria for green bond financing, sort of like participate in the transition as well? Tim, you want to take?
Sure. Thanks, Jackie. So, well, in this sense, right, when you look at transition and transition bonds, you can kind of think of them as green bonds in a way that are for hard to abate sectors, right? And so in that sense, it's really a question of really, how do things work in the larger scheme of things. And what we're seeing a lot of at the exchange around this space is that investors are really starting to look at, to zoom out of just the green bonds itself, and to look at how, the financing is really used for fitting in with the broader corporate efforts, right? And so there's a lot of innovations around it in that sense to help everyone come in on this. And really it's, it's really about making sure that there's credibility around the whole thing. And that's where all, everything has been spoken about. But these will really, solve itself. There's been so much effort around it, and these will really work itself out in time. Right, and leave it to Sunny to add on.
Thanks, Tim. Thanks, Jackie. The question of transition in capital market, I think, a hugely important one. And I think there is a definitely important role, because let's not pretend that transition is cheap. Transition is expensive for corporates and people, and therefore, if you look at I would call it the evolution of the capital market instruments. When we started off, early on in this journey, we had green, social, sustainable, maybe SDG bonds. And then in the second generation, we have transition bonds, sustainability linked bonds. So I think these instruments, this second generation instruments, if you like, is going to be very important to help companies and corporates make that transition. The other thing to consider is that when we started off in terms of capital market instruments, a lot of the modality we were looking at was based on use of proceed, where it was very clear that this funds raised on the capital market will be used for this infrastructure project, and it was very clear to the investors in that sense. As we begin talking about the transition journey over the last few years, there has been a thinking both amongst issuers and investors that maybe a strict use of proceed modality may not be appropriate all the time. And so what is important is that the company and the corporate is committed to make the transition. They have clear KPIs, clear direction and goals linked to SDGs, targets and indicators. And so even if that financing is not ring-fenced to a particular use of proceed, as long as there's adequate disclosure that investors can rely on, the investors can have confidence. Because I take Eugene's point about greenwashing. We want to allow transition, but we want to make it in a way that does not result in greenwashing, and which would destroy the investors' confidence. So disclosure is very important, and we can talk more about that. And second is the whole idea of verification, because it's not enough for issuers to say, I am going to make the transition, which is why you see that even though international standards, ICMA, for instance, ASEAN standards, don't make verification mandatory, but in reality, most issuers do go through this verification process, because they realize in order to convince investors that what they are doing is transition in the true sense of the word, they need that level of confidence, and verification plays the important role. I'll stop there. Thank you.
Okay, so thank you for covering sort of like the intent of green bond financing, and the role of or whether or not the use of proceeds model is going to be they're going to be appropriate for that one. But there's a question here on the chat box, which I think is sort of like kind of like flows into that as well. And it's really a question of practicality. So do you see the trend where issuers might pull back due to the high inflation and commodity prices and interest rates, because of all the cost or all the procedures needed for issuers to issue a green bond? Do you think there's, there could be an appetite issue because of these realities around issuing? Maybe Sunny, can you take that?
Sure, happy to, Jackie. Yes, so I think in reality, when we talk of corporate issuance in particular, there's always obviously the balance between what are the additional costs and what are the profit, or what am I getting from this particular issuance, right? So I think that's just being realistic, and because ultimately corporates are accountable to shareholders, they're accountable to stakeholders, well, they're accountable to the environment as well, obviously. So yes, there are additional steps, there are additional verification, additional procedures, which can be costly to issue green and sustainable capital market instruments. We've heard that not just in fact from corporates, but from governments as well. And so the question here is, what can we do collectively? What can governments do to help reduce that cost? And the second question is there a greenium, for instance, when we see issuance? Do they get better yield? Do they get better stickiness in the secondary market? How does that impact their reputation as a corporate? So you always need to find that balance between the additional procedures and costs and what they get in return. In terms of whether how this will impact issuers, I think as long as there's a need for financing, and we know that the cost for transition is very high, the cost to meet net zero targets is very high, I think there will always be the appetite from issuers. It's a matter of balancing cost and benefit. I'll stop there. Thank you.
Thank you. So do I read you correctly? Did I understand correctly that the goal is basically to for green bonds to cost the same as a typical a straight bond issuance? Or will there be a point of crossover, I guess is the question, or will green bonds always cost more than a typical bond?
I think in terms of cost, there will be additional costs because obviously there is additional verification and procedures. I don't think we can run away from that. But the question is, what I was trying to explain is, do you get the benefit from that particular issuance that outweigh the additional cost?
Thank you. That's quite clear.
Jackie, if I may add, on to Sunny's comment, in terms of our local experience, basically it's correct that there may be additional costs in terms of issuing green bonds, versus plain vanilla bond, because you need to, you need to align, the issuance to the additional standard. You need to get you have to obtain second party opinion, and you need to, get the bond verified in terms of the correct use of process. So all this, are additional, requirement, procedure, and also data disclosure from the corporate side, and for us in case of Thailand is, it add on, certain, expense to the bond issuance. But having said that, with the local government incentive, for example, SEC in Thailand waive in terms of leasing fee for green and ESG bond, this year and next year, for example, or the central bank and also the other regulator together, with ADB actually, they actually promoting the establishment of the local, ESG rating, service provider here in Thailand. So this, actually help in terms of, to lower, the transaction cost in terms of green bond issuance. But on the good side is that, from our experience, we have seen a significant, appetite from the local investor, from what we have helped our client in terms of underwriting the green and ESG bond. We see, 5 to 6 times in terms of oversubscription, and that also translates into the pricing advantage in that particular, issuance. So I think that, the benefit, in our case actually may outweigh, the additional cost incurred from the green or ESG bond issuance. And lastly, I think also very important is also the company that actually issue this, financing instrument. They also get, in terms of the reputational benefit, because it's also reiterate or demonstrate, their firm commitment to, ESG consideration or their ESG objective. Thank you.
Eugene, thank you so much for that. Good punsit, Eugene.
Yeah, thank you. I just wanted to add on to the very good responses that we've had from my fellow panelists. There's a big question now about whether the change in economic scenarios, meaning things like inflation and the cost of raw materials, and of course the experiences that we've had with some of the renewable facilities of late, which have been impaired by droughts and also poor wind patterns, whether that's going to effectively discourage people from investing more. I think the answer is really twofold. We have the short term and we've got the long term. So with the short term, of course, we can't build facilities fast enough if there's an energy crisis. So many people are starting to turn back to fossil fuels as a short-term solution. But I think we must remember this has to be a short-term solution. It cannot be a long-term solution. Secondly, we do see costs going up, but we have to remember that as costs go up, whether it's inflation, whether it's commodity prices, it's going up for everything. And what we want to do is to use renewables to help encourage longer-term energy and economic independence. Because if you're an importer of commodities right now, you're also suffering. So it's a short-term pain that you're experiencing. So the answer to both these questions is that in the longer term, we have to actually continue with this journey. It's a short-term blip that people are addressing using short-term measures that are not suitable as long-term measures. The second thing is, of course, what happens because we've seen the vulnerability of some of our renewable solutions. Yes, of course, we expected that. And if you look at it, things like droughts and changing weather patterns also caused by climate change. So the answer to this is new technologies and also to build more quickly to bulk up the facilities that we already have or are planning. The question then is, how do you raise the money? So I think it all comes down to clear, we must continue our journey and we must double our pace and double down on it. But how do we raise the money? And the answer has to come from the private sector. So we need to get the private sector financing ecosystem going.
Yeah, that makes a lot of sense. So we have a question here sent in. Let me read it out. What are the key roles that investors and regulators need to play in reshaping the financial ecosystem to accelerate the pace of green financing towards net zero or NDC contributions? Anybody would like to take that first? Maybe
I can start.
Okay, sure, Eugene, go ahead.
Well, I think, this point was raised about the whole of the society approach. It's actually the whole of the economy and whole of society approach. So everyone has a role to play. I agree with Tim, and that role will be quite different. But if we look at it, we really have three driving forces that shape our behavior. The first is actually self-action. So we are aware, corporates, individuals are aware that we have a situation and they take action to actually try and address it. Like a company that says, oh, I'm aware that climate change is bad, it's causing problems for everyone, I'm going to be a responsible corporate citizen. The second is actually the market. So the market comes in to impose market discipline, like the supply chain, for example. So customers refuse to buy from polluters or those who aren't aligning to climate change. And also providers of capital, they can say, well, I refuse to finance these people. And where these two mechanisms don't work, then the regulatory discipline comes in to underwrite the whole thing, where regulators and policymakers and governments come and say, we've got to impose policies or frameworks to do this. So that is the role of everybody. If you look at the corporates, they are supposed to instill self-discipline in themselves. They're supposed to work together to instill market discipline in the market to drive the agenda. And for policymakers, regulators, and governments, what they have to do is to provide that regulatory discipline to help bind all these other things together and to provide the impetus and the push into the right direction where it's officially agreed by everybody, because private sector initiatives tend to be very fragmented.
Anything to add from the other panelists? Thank you for that, Eugene.
I can add, Jackie,
Sure.
in terms of the role of the regulators. So I think when we look at what regulators can do and what they, what have been done and what they can do going forward, in the initial phase, we had this phase where everyone wanted to be sort of the regulator that achieved the first issuance and so forth, the biggest issuance, the first issuance. So there was a lot of focus on getting it out there, which has its role as well. That's important to get the visibility and because that can bring the sort of reputation that a particular market wants. But I think as we go forward, if we are serious and we want to make this transition to achieve NDCs, regulators, investors, all of us, we need to look at what can we do holistically, not just to get the first and the biggest issuance, but we need to start looking at what can we do to help those who are marginalized, those who are not getting access to the capital market, also able to issue sustainable capital market products. So for instance, a key topic that ADB has been looking at in several countries is the issuance of municipal bonds. Often we forget about municipalities and provincial level financing because everyone talk about big corporates and sovereign finance, but we forget about the province and what they need in order to achieve their own targets in terms of NDCs. So I think that sort of realization of moving together, not just looking at the limelight, but also looking at how we can bring everyone onto the transition journey, how we can bring everyone into the boat, so to speak, is important. As well as on the investor side, I would say what is important is to be disciplined in terms of understanding the disclosure. There's a very important role for investors to play because we mentioned just now about greenwashing, how they need to play an active role in terms of directing capital, influencing corporate behavior through the disclosure process. I'll stop there. Thank you.
Thank you so much. So I like that you brought up municipal bonds and basically the little guys who are often sort of like forgotten by, overarching thematics around sustainability. So if I push this concept a little bit further down the chain, do you think MSMEs or SMEs should also transition as well? So MSMEs typically have lower thresholds for cost and lower and less established than bigger corporates. Do you think should we give MSMEs a free pass for now and allow them to focus on their bottom line, or do they also have the responsibility to pitch in this whole journey that we are on? Maybe I'll throw that question to Kun Punsit.
Sure. Okay. I guess I also want to draw back to the case of Thailand. Okay. If you look at the economic structure of Thailand, okay, 10% of GDP is actually from agriculture, and yet it employs significant number of people here in Thailand. It accounts for about 1/3 of the employment in Thailand, whereas manufacturing is account for about 30% of our GDP. Again, export account for 60%. All of these are pretty much evolve, allow the operation of small and medium-sized enterprise here. Okay, and without this small and medium-sized enterprise, I don't believe that our NDC can be accomplished. I don't believe that Thailand commitment to COP26 and Paris Agreement can be accomplished. So I think SME play a very important role in terms of helping or supporting our achievement to the NDC and also Paris Agreement commitment. But having said that, it's quite expensive, or it's super expensive for SME to transit or to make certain transformation. So going back to Sunny and Eugene remark earlier, I believe that government play a very important role in terms of supporting MSME in that transformation or in that transition to less intensive carbon operation or activity. A case in Thailand, the Bank Thailand actually issued what they call the transformation loan at 65 billion baht. That will be available until next year. And the objective of this loan is to transform the business operation and process to make it greener. And they use commercial bank as a vehicle to disperse this I guess green loan or transformation loan. So these are some of the the mechanism or the strategy that a country like Thailand that can employ in terms of get participation and engagement from MSME, I believe. Okay, thank you.
Thank you. Anything to add, Eugene?
Yeah, thanks. It's a really good question because, as I mentioned just now, SMEs are actually the backbone of our economies. And because they're a big part of the economy, and as such, they need to be a big part of the solution. So sustainability is actually no longer a good to have, but a must have. And SMEs need to find a way to make sustainability a source of competitive advantage in the future. As you know, because in the future, sustainability won't just be a facet of business, but the core itself. So they have to be able to turn this around. And I know it's very challenging because they've got other problems before them right now. One way they can do this is to write the supply chain. We have to be very clear that as part of the supply chain, they're dictated by their customers as well. And we find that many of their customers are already embarking on net zero targets. So if SMEs don't align with this, they will actually be excluded from the supply chain. And a study from Standard Chartered reveals that MNCs are going to cut suppliers for failing to curb carbon emissions, with up to close to 80% of them planning to remove suppliers that can't meet their carbon transition targets by 2025. And other MNCs are willing to pay a premium for a net zero supplier. So you see an advantage here. And if we don't rectify this, just for example, in Malaysia, we stand to lose up to 65 billion in revenues, and Singapore about 150 billion. So this is where economic growth and sustainability can go hand in hand, but it cannot happen overnight because of the cost, time, and lack of capacity. So we need to be able to, coming back to that very important word, transition. And there's also an important opportunity here that we mustn't miss out on. We actually have the potential of up to $1 trillion in US dollars in additional GDP from new green type of industries. So there's an opportunity for SMEs again. That number can come in by 2030 if we start to realign ourselves.
Thank you for that one. I guess just to wrap the sort of like the talk on SMEs, where do SMEs go for expertise in terms of transitioning? Like, is there any instrument available to them or institutions that could actually help them in their transition journey? Sani or Eugene?
Let me go first, Jackie. Thanks for that question. So I think, you know, there is an important, so just kind of to also reflect on what Kun Pusit said earlier, so yes, MSMEs are a very important part of our journey towards net zero. Second, yes, it is very expensive for them, and these are not you know, your typical corporates who can afford the high cost. So I think there's a role, there is definitely a role for government to play in helping MSMEs make the transition. And one point that I like to reflect on is that we are, well, to some, we're still in the middle of the pandemic, moving towards the endemic. There's a lot of fiscal stimulus being provided to help people and MSMEs recover. So there is a tremendous opportunity, and we've seen this done in several countries, not nearly enough, where governments link the recovery support, the subsidy, the financing to green initiatives. And I think this is a very important opportunity to help our MSMEs make the transition. Because I think that with the smaller MSMEs, who no doubt form the backbone of our economy, governments need to play their role and to help them make the transition.
Thank you. Anything to add from the other panelists?
Yeah,
Tim?
perhaps I can chime in there as well, right? So SMEs definitely, as everyone has mentioned, form the backbone, and it's something that, you know, at the exchange we also look at quite closely. So one of the things that underpins a lot of the green financing, transition financing, is really data. And it can be really confusing when it comes to a lot of the sustainability reporting requirements, right? I mean, the investors really need the data for their investment decision making. But on the corporate side, it's really challenging, not just for the SMEs, but even for the, you know, really larger corporates. They have teams, really armies of people just looking at this. For the exchange, on our part, you know, we've been looking really to try to simplify the process, to provide some guidance to the broader market in this sense. So as I've mentioned, right, the ASEAN exchanges have come together with the common set of metrics. At SGX, we've also gone to the market with 27 core metrics that we've identified, cutting across all the different sustainability frameworks, the major ones like GRI and SASB. And the idea behind that, right, is to provide some guidance in terms of what to report on, as well as to have maximum impact for whatever the corporates are reporting on. And it's really with the SMEs in mind, right? So the long tail of our market, if you will. And the reason for that is because when we do regulate, we are self-regulated entity, and we can come in and make things mandatory, but you have to remember that if you make certain metrics mandatory, it's an entire process, right? To get that one number that the investors need, it takes a lot of people and a lot of effort. And so it's something that we don't do lightly. And it's something that really features very strongly in our conversations around that. To also help the SMEs, besides coming up with this core set of metrics, we have been working quite hard on an ESG disclosure platform. Now, with this platform, it really serves this purpose of having this guided process, and it prepares the SMEs not just for the equities market, but also to prepare them for whatever data requirements that we'll need to have. It lays that foundation for them to then access green financing solutions, right? So it's really with this entire cohesive framework in mind that we're doing all of these actions and supporting the broader economy as an exchange.
Thank you so much. Oh,
Jackie,
sorry, go ahead.
Yeah, I just wanted to add that actually MSMEs are a very broad spectrum, right? So you've got the guy who's really doing fish crackers right up to some of our listed companies who are classified as SMEs. So we really need to have different forms of financing for them. And right now it's easy to address the larger companies. They've got access to the capital markets, they've access to loan financing, more instruments are coming up for them, like Sunny mentioned, SLBs, transition bonds, they've got SLLs. But on the low end of the spectrum, I think this is where they need help. So loans remain the easiest sustainable finance instrument for SMEs. And I'm actually really heartened to see a lot of banks in Southeast Asia actually starting to reconfigure their lending policies to support a lot of the sustainability agenda with MSMEs. And at the same time, we also should look at how banks can intermediate. I mean, Sunny mentioned this thing about sustainability bonds just now and SDG bonds. And I know ADB has financed the creation of a sustainability bond toolkit for Southeast Asia. So if policy lending institutions like development banks can actually raise money using these bonds and on lend to the smaller companies, I think that'd be very useful. The second is that we have the option of technology that's become a new avenue. So crowdfunding and P2P platforms can also help fund the smaller companies. And we've actually seen some success in that, more obviously has to come. And we've also seen how in the Islamic finance space, they have focused Islamic crowdfunding platforms. So these are opportunities that we can look at as well.
Thank you for that. So we're coming up to the hour, and thank you so much for your time, but I'd like to close the session out with one question to each of you. So if you could describe in one word the journey of transitioning to a green economy, what would that be? So maybe I'll start off with Kun Puns at this time. Oh, sorry, you're on mute.
Okay, may I use two words? Okay.
Okay.
I would cite, tremendous opportunity.
Mm.
Okay, in terms of transition financing, in Thailand and ASEAN as a whole. Thank you.
Thank you. How about you, Tim?
Well, excitement is really the word that comes to mind, right? It is definitely a very exciting journey, but it's also very necessary.
Sunny?
I want to beat Kun Putsit, so I will request for four words from you. It's a tagline that's being used internationally and coined by Minister of Finance in Indonesia, just an affordable transition.
Mm. And lastly, but obviously not the least, Eugene?
Well, I probably end up summarizing what everyone has said. It's critical.
Thank you so much. So with that, I would like to thank our 4 panelists today. I certainly learned a lot. And if there's one thing that stuck with me, it's that it's ESG and sustainability, just like how we dealt with the global, with COVID-19, requires an all hands on deck approach. So whether you're this big corporate or first world country, which have all the resources to push this cause along, or you're, a new startup MSME who just decided to reduce plastic packaging, all of those effort count. So this movement has a long road ahead of itself, but we are definitely covering ground, and it's definitely at an encouragingly accelerating pace. So with that, I would like to thank everybody, and over to you, Seng Yao.
Thanks, Jacqueline, and a big a round of applause for the panelists, Eugene, Timothy, Sunny, and Kunpunsit, for your keen insights and sharing. We've come to the end of the programming, and in closing, a huge thank you all to you, so our valued clients, for your time and participation today. With that, then, on behalf of Maybank, thank you very much for your business, and we really look forward to seeing you again very soon. Thank you, and have a great day ahead.